Hey, everybody, and welcome back to another episode. I'm your host, Brennan Cobb, and today I've got Ton on the show. He is a retired pharmacist, commercial real estate investor, entrepreneur, and he is a specialist when it comes to commercial. He's got the investing beyond multifamily, and his mission is very simple. He wants to help others grow wealth, think bigger, and build meaningful lives through smart investing and disciplined execution. Welcome to the show.
Brandon, appreciate you having me on. Thank you for that badass intro. I don't really have much more to add than that.
Hey, it's good to have you on. This is going to be fun. We were chit chatting a little bit before this, and you've raised over $10 million of equity from conferences. Now, I'm a capital raiser myself. I do a lot of real estate deals. I have not raised a single dollar from a conference that I've gone to, which means I'm doing something wrong. I've raised all my money the other way, but I am thinking about this the wrong way. So today, I want to turn your brain upside down and figure out how other people can raise capital by going to conferences, because a lot of people think, oh, I got to go spend a bunch of money on paid ads. I got to build a big team. Oh my gosh, I got to generate social media content every day. That's me. I've raised a lot of money from generating the social media content. So this sounds like a much easier way because I've done a lot of conferences and I really enjoy going and connecting with people. So before we kind of get into that, like, what's your story? How did you retire as a pharmacist? How did you get into the whole commercial real estate world, and why commercial over all the other different niches?
Yeah, for sure. So I started as a pharmacist, like you mentioned. I practiced for about 3 years or so, and during my time in pharmacy school, I was not the best student in pharmacy school because instead of listening to lectures or listening to the podcast about the lectures, I was busy looking at finances, learning about finances, learning how to invest. That brought me to the stock market. That brought me down a huge rabbit hole of all things investing. And eventually, it landed me on real estate. So, again, during my schooling days, I was listening to all these podcasts, hoarding all these books about real estate. And as soon as I graduated, as soon as I started practicing, I pulled the trigger. I bought my first duplex. And for the first probably 16 or so months, my focus was on residential real estate. And I did practically everything. I wholesaled, I flipped, I bought and held, I bird, you name it. I think the only thing I really didn't do was investing in the notes. And eventually, I transitioned out of that because I had partners in the residential side. We were butting heads a little bit and kind of just had our differences. So we decided to part ways. It took us roughly another year or so to sell that entire portfolio. After we sold it, we ended up parting ways, and I was kind of on a hiatus. I didn't know what the hell to do. Like, do I continue doing this? Do I continue wholesaling, flipping, buying and hold, build up another portfolio? What is it? And so I was lost for a minute. And the idea of commercial was always kind of like in the back of my mind, but I didn't really understand it. And if you go out on YouTube University, if you go out on Google, you're going to have a pretty challenging time finding good, reliable information. Maybe now it's different, but call it 6 years ago, it was a lot different for me. So I hunted and hunted, and eventually I found a mentor that was in the commercial real estate world and linked up with him. He taught me everything I knew up to this day, and now is my business partner in the commercial side. And to answer your question, Brandon, why commercial? I like the idea of commercial because it was so eluding. It was one of those that, I didn't know enough about it and I wanted to know about it. And I wanted to like master it almost. It was just another puzzle to the game that I kind of wanted to get my brain involved in. Does that answer all of your questions?
Yeah, no, that's a lot right there. It's so funny because you can make money in just about anything. And that's what I tell people who are trying to figure out what real estate niche or what do they want to go. Or my favorite question, what's the best real estate to get in? It's like, dude, come on, man. Like, you can make money in all of them. Do the one that interests you the most, that you feel drawn towards, right? And let's be honest, businesses aren't going anywhere, right? Commercials not going anywhere anytime soon. So before we get into the specifics, man, uh, your shirt says invest beyond multifamily. I love that. Transaction volume has been down like 80% the last couple of years in multifamily. It has been a bloodbath. I'm an LP, in some multifamily deals. I'm getting capital calls, and I've had some losses on some investments. So, what's been happening in the commercial world the last couple of years? Has it been the same kind of bloodbath? Is it, um, have you seen the transaction volume go down like 80% since rates went up in 2022?
As far as commercial goes, I would have to say that the office sector has gotten plummeted the most. And obviously during COVID, the
Yeah.
that kind of just washed out a lot of offices. They dropped probably over 80% in value, and the vacancies considerably dropped. And that's, I would say, primarily in a lot of the larger metros, your coastal areas, Phoenix, Texas, etc. Um, you'll see a little bit of that also in the smaller, when you go inland in the US, but it's not as pronounced. But the same kind of theme is also there. You're going to see offices that are in the CBD district, that's central business districts, that are completely decimated. Whereas the office sector in the suburbs are still thriving, or if they did get hit, they didn't get hit as bad as the CBD offices. As far as the other asset classes, honestly, in the past couple of years, I'm seeing cap rates compress in the industrial sector, flex space sector, as well as the retail sector. So that tells me those sectors have been considerably strong. You're looking at data centers nowadays. Those are actually going through the roof. So a lot of these assets are compressing and they could correct in the future. But as far as your question goes, the transaction volumes I've seen maintain for retail as well as industrial, while office has declined significantly.
Hmm. Interesting. So it's different depending on the sector within commercial real estate. It's which one's done the best?
Personally, I think industrial has done the best. Their cap rates I've seen compress pretty significantly, but retail I would say is pretty strong still, so it's right behind industrial.
That's interesting. Yeah, the office space. So we rent out. I don't have an office anymore. We used to have an office. We don't. COVID kind of killed that. We'll still rent office space for like the day when we need to do a big meeting or something. And I go to these class A office locations in just prime, and it is a ghost town. I don't know how they're staying in business. Some of them, the whole building's empty. They don't even have a receptionist, and they have to like have the receptionist jump back and forth between different properties. I mean, it's literally probably 80% vacant. It's crazy how vacant these buildings are. And I'm like, where's the distress? Like, why aren't these things going back to the bank? Why are you not seeing more fire sales? Why is that?
And so you do, if you, I'm in the Cincinnati market, and there's a lot of them that I've seen that are going through foreclosures or short sales. Um, for other markets outside of that, I'm sure the same story is unfolding, right? But again, if you look at the just the suburb areas, some of them are still doing just fine. They're probably at 50% occupancy, 60% occupancy, possibly a little bit lower than that, and they still cash flow from day one. So my thesis with the office space is that this is a great opportunity to purchase office as an asset class for pennies on the dollar and still cash flow on these assets. So to answer your question, I still think there are a lot of transactions that are out there that is being bank involved to the point where they're selling it. But again, that's where you're getting properties for a lot cheaper than they are. And I'll give you an example. I've been looking at a property out here that traded at $9.5 million back in 2017, and it's under court receivership now for, they went to auction at 1.9 and they got nobody. It's currently at 1.5 on the market. And we're looking at it at like 900,000. If we can get it at 900,000 and get a really good tenant in there, there's a lot of upside on the back. It's just
Yeah.
how do you carry out that business plan?
Yeah. Interesting. How do you carry out that business plan? Because that's like, 10, 15 cents on the dollar. And what do you think happened to cause that kind of collapse in pricing? Is that just because all of the rental space for office just, went through the floor because the demand collapsed?
Well, yeah, I mean, since they bought it in 17 at 9.5, COVID was right around the corner. And
Yeah.
once COVID hit, everybody was in the shitter. Businesses, the landlords, right? And so whoever purchased that property at 9.5 million, now they're considerably underwater. And so that bank is not going to make that note back, right? Which
Right.
again, that's why they're forcing the sale. To answer your question, how do we carry out that business plan? I think you have to have a really good pulse on the market. So this one in particular, this property is in the suburbs, and we have connections within the suburbs where there are brokers, managing directors of big firms, etc. We call them, utilize their experience, and leverage that network in order to understand what the market truly is saying. So if, for example, we talked to one of the brokers that we knew in our network, and they mentioned that there are interests for this particular office space. They'll probably take an entire floor, and this is a three-story office building. We have interest for one floor. However, the problem is they're going to want excessive TI, and TI stands for tenant improvement. So, and I was like, okay, what's a significant TI? And they were like, they're probably going to want around $60 in TI. And I was like, holy cow, $60?
What does that mean? Translate that for someone who's not commercial savvy?
Yeah, so tenant improvement, it's technically tenant improvement allowance. TI is just a short acronym for it, but it essentially means that the landlord is giving a concession of $60 per square foot for this tenant for their space
Oh,
to
wow.
to put into whatever they're looking for. Maybe it's flooring, maybe it's
You can
walls.
renovate the whole building for that.
Right, right, right. And now once I was like, okay, $60 a square foot, that's a little high, but the purchase price for this thing is like at 1 million, it's, 10, $12 a square foot. So you'd technically be all in at 70 something dollars a square foot, which is that's a little high for office, right? However, the tenant, this particular tenant, was willing to even put in $200 of their own, $200 per square foot of their own money to renovate that space. I was like, what are they putting in here? Whale tusk? Like Egyptian marble?
Yeah.
What's going on here? But the trade-off when you're doing that is that they're going to be there for a long time. They're investing all that money into that space. They're not going to just up and leave, right? So again, to answer your question, Brandon, is can you organize a plan together to put in a particular tenant and have the appropriate operating reserves and capital to satisfy that particular deal in order for this deal to work. So if we're giving out $60 per square foot in tenant improvement and they sign a 10-year lease, what does that number look like? Does that push the value of that building, to what you've actually paid for it? All in cost plus the tenant improvement. And does it cover all the expenses? Or if it doesn't, how long does it take you to procure another tenant to lease another floor or to the point where you're stabilized to actually be able to exit this property? So
How,
those are the things that we think about.
to scoop these deals up, I mean, do you have to have all cash? Is that why you're raising capital from investors? Because who's going to give you a loan? Like, what bank is going to give you a loan, even if it's at a good deal, if there's no cash flow coming in?
Yeah, from what I've seen so far, banks are very shy of office currently. They
Ah,
typically are pushing them away. Even some offices that are 60% occupied, that's cash flowing from day one, hits the DSCR level, they would turn them
yeah.
down, which so I don't blame them. It's just, where the market is for office and, they just don't like office at the moment. So, yes, for something like this, we would either have to purchase it cash with our own capital or raise the entire capital with operating reserves in order to make the deal operate correctly.
And what kind of reserves are you seeing the lenders want to see here if you're buying, an empty building per se, that has no cash flow?
I think for something like this, you would probably have to have at least 18 months of
Wow.
operating expenses in reserves.
Wow.
So
Got
it's
it.
it's
Yeah.
pretty pricey.
Yeah. And because
So
it takes a while to get a large tenant like that in.
yeah, yeah, absolutely. So you're looking at, let's say it's $1 million purchase, you're probably looking at another 2 million in just in TI, capital expenditures, it's and operating reserves, right? So you're almost, you're all in for probably 3+ million.
Yeah. But you got significant upside if you can land that tenant and stabilize the
Right.
asset.
And the only problem that we don't know currently is what their terms are in terms of, what they're willing to lease out, although they're already putting in $200 per square foot of their own improvements. So it's like, uh, if I have that number, I can kind of reverse engineer it to see if it's actually worth it, but that's what I don't have at the moment.
What is it? Does it not concern you where it seems like it could be a double-edged sword where, yeah, you go in, get a great deal on an office space, rock bottom prices, but then you got to turn around and sell it. And like you said, banks aren't lending on stuff like that, right? It's tough. So does that not concern you for, I know we're just talking about office right now in the whole commercial sector, which is a very small sector, but
No, of course it does. As with anything, there's always risk, right? And the number one thing is being able to dispose of the asset. And from my perspective, if it cash flows and we can hold on to it, by all means, why not? Why not keep holding on to it? But the end goal is also the disposition. So I think the office sector will recover at some point. And in some markets you are seeing it recover. So I don't think market's going to be at an all-time low forever. Just with any other asset class, when they're, at their troughs, they're going to eventually recover and get to their peak, right?
yeah,
So depending on the time frame, again, if it cash flows, we can hold on to it for a while. And and I don't think, that's probably at least a 3-year play, uh, you know,
mm,
probably a 5-year play, and potentially a 10-year play. So I think by year 4 or 5, the potential of refinancing becomes a lot greater. I think their appetites are going to change, and office might recover at that point. So then you could either refi it or you can either dispose of it at that moment in time once they recover.
interesting. I see. I see what you mean there. Very cool. Let's get into how you raised all this money from conferences because I've been to a lot of conferences and I didn't raise a single dollar. And I've raised some money, right? I've got my methods, but I'm very interested in this because I feel like I just missed a huge opportunity all these years going to conferences. So 10 million bucks. Walk me through what did the first time you raised money at a conference look like? I mean, how did you go about doing it?
Well, let me back up just a little bit, Brandon. Have you heard of the book called The Go-Giver
Yeah,
by Bob
great
Berg?
book.
Bob Berg and
One of my all-time favorites.
yes, it's literally my favorite book, and I think I reread that one amongst one or two others every year. And the one law that sticks with me the most is the law of authenticity. And for people that know me, I curse a lot. I really don't have a filter, and a lot of times I'm pretty straightforward with you. I try not to beat around the bush, and I give it to you pretty straight. And at conferences, I'm that same guy. I'm not here. You're going to see me in a ball cap. You're going to see me either in a black t-shirt or this polo, and I'll either have, shorts on or maybe some decent slacks on. But rarely are you going to see me in a suit because I'm not there to sell anything. I'm a shitty salesman. I'll tell you that 1000%. But what I am good at is talking to people, listening to them, and just conversing. So a lot of times at these conferences, I don't really attend the panels. I'm outside the hallways, I'm roaming around trying to catch people, talk to whoever I can, or if a conference has a particular app out there that you're able to set meetings with people, I'll do that. But I found for me that roaming the hallways was a lot more effective. And a lot of times I'm just where the social people are. And a lot of times for me that's the bar. I'm sitting at the bar, I'll drink a beer, one or two, maybe cocktails, just having a conversation with random people. They could be just at the hotel or at the venue, or they could be a person that's attending the venue. And I just carry those conversations with them, and I'm pretty direct. Again, so I tell them what I do, and this is what I have. And let's say if they ask me what my asks are, I'm looking for investors, and I'm always looking for the next deal. And if they are curious, and a lot of times during our conversations, I'm curious about them. I generally just ask questions about them. A lot of times it doesn't even get to what I do and what I have and whatnot. But if it does get to that point, they'll ask about what I have and what I do, and I'll give them those answers. And those connections there are pure and genuine. And a lot of times, from my experience, it's rolled out to longer term relationships that have rolled into investors. I can't say I've always, that I've talked to a person there and they wanted to invest immediately. It's something that you kind of build on, right?
Mhm.
And going to multiple conferences per year, you're going to run into similar people, and they eventually see you. You keep the conversation going forward, and it just kind of evolves that way. I hope that answers your question. A little long-winded there, but
Yeah, no, no, it makes sense. So you build these relationships when you're there. Talk to me a little bit more about how you go into, building that relationship and how does that turn into a conversation around investing?
yeah, so it's I think it all comes down to actively listening to the person. And when you're and there's a great book out there called The Like Switch. Uh, everybody should take a look at it. I forget who the author is, but it's actively listening. So when you're in a conversation with anybody, whether it be somebody who's a stranger or your spouse, kids, friends, family, etc., you want to actively listen because the more you talk about yourself, the less you're going to be liked. People don't want to hear about the shit you got going on. They want to talk about themselves because that makes them feel good. And when you're actively listening and you're asking genuinely valuable questions and, probing questions, if you will, that opens the other person up a lot. And so in their mind, they're thinking, oh my God, this guy or this person that's asking me this question is really involved in this story. They're very interested in it. They want to learn more. And that makes them feel good about themselves. And then they open up. So a lot of times it's me asking just general questions, and I go by the acronym FORD. F stands for family, O stands for occupation,
Yeah.
R stands for recreational activities, and D is dreams. So you ask about those, four things, and it
I
could,
like the D. I was using four: family, occupation, recreation. I've never heard of the D though, dreams. That's a good one.
yeah. So, and it doesn't have to, it's just kind of a guideline for you to have something to talk about, right? When you're asking questions, you can roll that into anything else. Just keep it rolling, right?
Mhm.
But throughout those conversations, and let's say we use Ford in particular, you learn a lot about these people. You learn a lot about these potential investors. For me, I'm really there just to try to make a friend versus, and if they become investors, even better. Now my friend is a partner with me on some of these deals, which is amazing. But once you learn about them, you have to be able to, unless you have an incredible memory, I would recommend writing these things down, have somewhat of a CRM, if you will. And for me, I just kind of take notes on so like in your contacts app, you have a notes section. I just jot down a couple notes there to remind me of what I've learned about that person. If you have a proper CRM, by all means, use that. But so the point of doing that is, let's say I met them at conference number one. Later in the year, I might meet them at conference number two. Now we can pick exactly off where we dropped off at, right?
Mhm.
So he could be, let's say it's a male I'm talking to, and he's talking to me about his spouse, his kids, their activities. Next time I catch up with him, like, oh, how's your wife doing? How's your kids doing? What activities are they in now? Are they doing well in there? Are they doing well in school? Things like that carry a lot of weight, and it goes very far because just let's say the difference between conference one and conference two is 6 months. for you to remember that about somebody is pretty big, right? So that is how I continuously evolve my relationships with people. And a lot of times I have an odd name, you know? So a lot of times,
You remember.
yeah. So sometimes people remember, sometimes they don't. Sometimes, but what they do remember is the conversation that we had, and they remember the guy in the hat. So they do remember me to some extent, even if they don't remember my name.
So how does it turn into a conversation around investing and doing real estate deals? So you got it. You listen, you build rapport. Forward. You got that. Build a relationship. How does it turn into doing business?
Yeah, so if I ask them about occupation, if I ask them about their recreations and their dreams, right? The occupation and the dreams are the biggest ones here. If you can tie those two together and it's something that you can provide for them, if you can help them through with that, then that is how I tie in the investing side. Okay, if your occupation is this, you're an accredited investor making 300 grand, 400 grand, but your dreams are to spend a lot more time with your family or in some other variable that's kind of the same. I tie it into investing. Have you ever thought about investing? Yes, no, maybe not. Why? Right? Why haven't you? Because I think this is a good, viable avenue for you to take if that's truly your dream. You know, if you have, okay, what have you thought about? What would be your vehicle, or are you thinking about going to a wealth management firm or something like that? And then now the conversation comes down to investing in general, and I share what I know, and I don't really, again, I don't really sell them on my fund or my projects. I just tell them like, if real estate's your play, I would tell you focus on what you understand. And a lot of times it comes to multifamily because your multifamily pool is huge. People understand
Yeah.
multifamily. So, and then, eventually, if it comes back to me, I would tell them, this is what I do. I don't know if it's a good fit for you or not. Maybe it isn't, but I do everything non-multifamily. So if that's something that you're interested in, I would have to educate you on, the differences, the nuances, etc.
Yeah.
And the conversation just kind of goes from there. And, there'll be follow-up calls, etc.
Very cool. So yeah, you figure out what their occupation is, what their dreams are, and hey, are you interested in getting? Are you interested in learning more about real estate investment opportunities? And if they say yes, it just kind of opens the door from there.
Yeah, absolutely. If you think about it, Brandon, as we are real estate investors, what do we really do? We find an incredible real estate opportunity that has the potential to generate returns, and then we find the capital, and then we marry the two together, right? So that's essentially our jobs. But from talking to people on the capital side, you're essentially trying to fix a problem for them. And a lot of times, investors, whether they're ultra wealthy or they have capital sitting here that they don't know what to do with, they both kind of have the same problem,
Yeah.
finding adequate yield, right? So now you're doing the same thing. You're finding people that have the problem of finding that yield for whatever reason, whether it be having more time, whether it be wanting to diversify, etc., and you're marrying it with your opportunity. So in a sense, you are helping them dramatically. So if you keep that mindset of wanting to help the people around you or help more lives, then I think it becomes just naturally like you just bring investors in naturally is what I'm trying to say. I never really thought about bringing in more money or bringing in more investors. I have the mentality of, okay, I want to meet a new friend. I want to meet a new badass person to tell me some of these cool stories that they're doing, journeys, adventures, etc. And if I can help them in some way, great. If I can add value, phenomenal. And the one way that I do know how to do it is share what I know from a knowledge perspective, or two, help you increase your net worth or your money in some way, shape, or form with this specific asset class.
Mhm. What do you think is next for commercial real estate? What do you think is going to happen this year and in 2027 based on everything that's happened? You got Kevin Warsh now. Jerome Powell's out. You've got some crazy stuff going on with the war, oil prices, some stuff people didn't foresee. What do you think happens?
Man, I am so unpolitical. I know nothing about politics. It's insane, right? I do follow macro to some extent, and I've been doing a very bad job at it. I have no idea where this war is going to go. Not a single clue. And with Kevin Warsh, I don't know his stance, so I can't speak to that. But what I do know is that this bull market has ran for a very long time. So, and I could say this, I could say this for the next 4 or 5 years, and it'll probably never happen as far as a correction, right? You
When you
know,
say bull market, you mean like in the S&P 500 or in real estate?
uh, well, particularly in the S&P 500, just, the
Okay.
equities market, right? And as it relates to the stock market, everything's kind of intertwined to some way, shape, or form. The real estate market follows an 18 and a half year cycle. So I think within the next probably 12, 18 months, we're going to have some sort of correction. I don't know how big it is, but I think there is going to be some sort of correction. And I've honestly thought this for a while now. And it's never happened. So, so maybe in the next 12 to 18 months, I'm still an idiot. Um, but it's been going on for so long that it has to correct to some way, shape, or form. I just don't know when. My guess is 12 to 18 months.
You
Um,
don't think the bottom's in for like commercial real estate with everything that's happened with interest rates and all the foreclosures? You think there's still another lower low?
so I think if you subdivide it out, are you saying commercial real estate in general, or can I subdivide it out to asset classes?
Yeah, oh yeah, 100% asset class. So the question was, what do you think is going to happen? But with everything that's going on right now, what do you think happens with commercial real estate? For the rest of 2026 and then 2027.
I think I think office has already bottomed out. I think it's going to either stay stagnant or uptick just a bit. I think you'll see a small correction in retail and industrial. And as far as multifamily goes, I think there's going to be a relatively larger correction because a lot of people are buying these things incorrectly.
Mm.
And it's just, I mean, I've seen a couple of them go under foreclosure, right? So a lot of it is going to be really, really underwater. And I think that might be another opportunity to purchase multifamily in the next, call it 18 to 24 months.
Interesting. Thanks for your take on that. What's next with for you with all the success that you've got? What are you doing next? What are you focused on?
Well, my play box is s- technically it's 2 to 10 million dollars. That's where I've been finding, and I'm a value add commercial guy, so that's where I've been finding the sweet spot for projects. But we've got access now to institutional capital, if you will, and that will allow us to look for deals that are over 10 million up to call it 50 million or so.
Hmm.
So that will be interesting to see. I've always avoided it because we being myself and my partner were competing against REITs, firms, institutional capital, and we weren't able to outcompete them, right? They have all this cash already there, so as far as term goes, they're going to beat us out all day. But now since we have the access to it, I'm very interested to see what we can find in that play box from the 10 to 50 million dollar play box. From what I've seen so far, I haven't really seen a lot of value add potential up there. So
Hmm.
maybe it just requires me digging a little bit harder and, doing a little bit more research. But yeah, so that's what's next for us, jumping up to the next ladder in the rung.
10 to 50 million. Here we go. I love it. Don, this has been awesome. If people want to learn more about you, learn more about your fund, how you invest and what your strategy is with commercial real estate, where can they go?
Yeah, so if you go to investbeyondmultifamily.com, you can find more information about the fund in and of itself. My partner is Ash Patel. He runs a commercial real estate course. If you are anyone who is a newbie or in an alternative asset class who's wanting to learn, I think that's probably the best way to check it out. You can use my first name, last name. I think you get a discount if you do that. I think it's 10% off. Um, Outside of that, as far as education, I think Brandon's podcast is phenomenal. If you want to listen to mine, I have one called Wonton Wealth, which Brandon was on. And I also have a book out there about commercial real estate called Value Over Volume on Amazon. Working on the second one currently, but the first one should get you about 50% of the way there.
All right, value over volume. I really like that. So, hey guys, if you're listening to this and you know somebody that needs to hear it, maybe you thought of them while this episode, go ahead and send them that episode. Share it with your friends and family. Subscribe, and we will see you guys in the next episode. Ton, thanks for coming on.
Appreciate you, brother.